Hey everybody, and welcome back to NFT Kings. My name is Matt, and in today's video, I'm going to be going over exactly what's been going on with Mana or Decentraland and give you guys my personal opinion on where I see this headed here in the near future. So if you guys are new, make sure to drop a like and subscribe for more daily videos, and let's get right into it, folks. So if you guys haven't seen this ridiculous surge here, what essentially we are working with is an unprecedented rise in market cap, in price, for Decentraland here over the past few days. And this is pretty amazing stuff because, again, we were sitting really in the 70-80 cent range, and out of nowhere, we really had an incredible explosion. And this explosion was largely fueled by Facebook because they obviously are fueling their metaverse idea here with Mana leading the pack, of course. And the issue to me when it comes to this, and I think the problem that a lot of people are not realizing when looking at Mana is, simply put, Facebook did not actually acknowledge Mana in any way, shape, or form. This is the only major roadblock I see when I look at this, because as great as Decentraland is, Facebook did not specifically mention it in their goals to build a decentralized universe. That's not something they talked about. So the fact that Mana had a run, while fantastic, and I've been supporting this project forever, while they had a run, it definitely is not quite as, sort of tightly linked to Facebook as it could have been. So we saw a very high surge all the way up to a little over $4 at some point, and it's not even showing really on this graph because of how fleeting those moments were, but it headed up to a little bit above $4 for a very short period of time. But right now we are watching it hanging out here a little under 3. So the question is, and I think the question that a lot of people have, should I sell? Should I get out of it? What is the deal with Decentraland? Well, again, you guys can see we've risen to rank 40 on here. We've definitely got a lot of good, sort of market exposure, including a $5 billion market cap, which has placed us definitely in a more competitive range with a lot of different assets, of course, on CoinMarketCap. Obviously, we are only just a little bit behind FTX, Theta, ICP, so there's definitely a lot of big players up here which we are competing with. Now, unfortunately, compared to where we were, say, 24 hours ago, this price is a little bit lower. And I think a lot of people don't realize that this pullback is healthy and it is normal. And from what I am seeing, I am not watching anything particularly tragic. So when we look at this here over on TradingView, you guys have to keep in mind we're looking at an incredibly volatile surge. And a way to sort of, assess that volatility and to prove that volatility is to take a look at the relative strength index, which you guys can see is greatly exceeded above 70 here, up to around 88, 89. So what this relative strength index is doing is it's measuring buy volume and sell volume, and it is taking those volumes into account and determining whether or not they feel appropriate due to current market conditions. So what we are working with, again, is a very large surge in buy volume. A surge that is so high that it sends it all the way up to around 90, and again, the price heads up to around $5 for a fleeting moment. That's a bit of a problem because that is not sustained, and you guys can see we gradually slip down towards the lower half of the relative strength index. But this isn't all bad because we have the remainder of this space to move down if we need to in regards to a price slippage without being any horrific, crash of any kind, while also having the opportunity to have a rebound and give us a little bit of headroom here to perhaps chart upwards to around maybe 310 or 320 without having any supply issues, without having an overwhelming amount of buy volume that throws everything for a loop. So we do have a lot of room here. I definitely do think this is in a healthy spot. Now, when it comes to establishing a line of support, it's a little tough to do because there really isn't much prior evidence of trends, and really what we're working with now is just a downtrend. But if you wanted to be safe, I think a good assessment is to take a look at where it initially kind of had this battle at around 250. I think 250 is where a lot of people had their limit buy, their limit sell orders. So 250 is where it was contested for a while. So I think it is very safe to say somewhere below 250, maybe like 225 or somewhere around there could be a potentially safe spot to add a line of support. So, 220, 225, something like this, I think is a very safe line of support to have here, because even if we lose all of this progress, we would still be able to retain the growth that was made here on the early hours of the 30th here up to the 225 line. So I don't think this hype here is going to be completely negated by a sort of crash. Could this hype be slightly worn off? Yes, and it looks as if we're losing a little bit of that steam, but it's okay because I'm in this for the long term and I believe in Mana for the long term, and that's really the best we could do, man. The goal is just to be as safe as possible and to dollar cost average in as best as we can. And this is something I've been talking a lot about with some people on my Discord, which if you guys haven't joined it, check out the comments section. I will put my Discord there in the comments as a pinned comment. But essentially, if you guys do not know about dollar cost averaging in this sense, essentially the goal here is to buy more mana, at least for me and a lot of other people, but to buy it at a cheaper rate, to buy it in a way that you are not exceedingly raising your average to where you're always in the red. Because think about it this way, if you bought mana at $5, you'd always be in the red right now because the chances of it hitting 5 today, pretty low. I don't think it's going to happen. So if you bought at 5, any price is the red for you. Where if you bought, let's say, a little bit at $1 and you buy a little bit more at $3, your average is now $2, you're still doing pretty good. So the goal is to dollar cost average down. Even if you want to add more to your bag, you can dollar cost average down and have a little bit more peace of mind. So that is our goal here. When we take a look, of course, at the Fibonacci retracement, which I always do like to look at, you guys can see this is going to analyze the most recent run. So it is going to take a look at the very all-time high here at around $5, and it is going to head all the way down to around $3. So it has not taken into account these recent trends, but it has taken into account these recent trends, and essentially it's not giving us all that much information because unfortunately with the Fibonacci retracement in this instance, the all-time top here, the 5, was extremely fleeting. So all of these lines that were charted were based around this 5, but that really was not a sustained price. So the only thing that we can tell from this is that this 23.6% line looks to be a very difficult line to kind of re-enter. This, which sort of acted as a support for a little bit, is now going to act as a bit of a resistance. So it's very possible we could bounce, off of that for the near future, watching it, whatever the current price is, kind of being held back by like the 350 line. And I think there is, some historical kind of context here for this 350 line being a little difficult because every time we get to it, you guys can see we have a little bit of difficulty maintaining it. And that has been basically the story with all these candles here on the day. So that is definitely something to look for in regards to buying at the 350 line. So if you guys set your limit buy for 350, you might be a little bit disappointed, I think, if it ends up not succeeding at holding past that line. So really, guys, what it comes down to is the fact that the Fibonacci retracement has not really done a great job at charting this for us. Of course, when we check the MACD, you guys can see this is giving us some indication as to whether or not to buy or sell, of course, and we're getting a light sell right now, so I suppose the MACD, can see this having a little bit of a downtrend, in the near future, but nothing overwhelming. I do see it possible to have a recovery, and that is, very, conceivable with the MACD like this, and really the goal here in the future is just to watch how these candles interact and how these candles are going to establish themselves above, I think, again, a very safe estimate to say somewhere around the 2.25 line. And again, this line really does account for all of the gains made yesterday, so even if we are to lose some of them, the 2.25 line would still be a good line of support to check in on. If it goes below that, I definitely do think there is, perhaps a little bit more to worry about, but for now, I definitely don't think we're headed below 225. That being said, guys, my name is Matt. I hope you guys have enjoyed the video. If you guys did, make sure to drop a like and subscribe for more Decentraland videos. Catch you guys on the next one. Peace.